on the topic of locations, and more specifically, we're going to talk about 5 locations to know, and I'm going to show you how to use each one of those locations to exploit them for maximum consistency and profitability. Now, in my opinion, location is one of the most important things that underlies proper trading. Location serves as the foundation for getting most of your trades right. And I've seen traders that actually are very decent traders. They have good strategies, good tactics, and even good discipline, yet they're not knowledgeable about locations. And because they're not knowledgeable about locations and the impact locations have on their trading, that they're actually not profitable. So despite having great tactics, despite having a great method, despite being disciplined, they're still not profitable because they get locations wrong. And starting from today, you're not going to be part of that group. You're going to get locations right every single time. And this is one of those concepts that will have one of the largest impacts on your trading of all other things. All right, so let's get started. First of all, before we can address locations, I have to tell you what locations are based off of. Locations are primarily determined by the position of the 20-period moving average, which is this blue line here, and the 200-period moving average. Now, I use simple moving averages. These are not exponential or weighted or anything like that. I use the plain, vanilla, simple moving averages, the 20 and the 200. I want you to notice, we're looking at the stock. Okay, NVDA, it's a 2-minute chart. The time frame doesn't matter. Locations are applicable across all time frames and all markets, no matter what you trade. Now, these 2 moving averages help us determine the different locations. If your stock is above both moving averages, like NVIDIA is currently above the 20 and the 200, you are considered to be in positive position. Okay, if your stock, like let's pull up Beyond, if your stock happens to be under the 20-period moving average and the 200-period moving average, you're considered to be in a negative position. Now, negative doesn't mean bad. Negative just is the term I'm going to use for the sake of simplicity. All right, I love stocks in negative territory. In fact, I make the most money off of stocks in negative territory. So we have positive position above the 2 moving averages, and we have negative position. Now, I want you to pay special attention to the word or the term that I'm using. I'm using the term position. Okay, so position, we have 2 key positions. Position 1, positive position above the moving averages, as is the case we opened yesterday in NVIDIA. And of course, later in the stock Beyond, you saw the example of a stock being in negative position. So that's very important. Now, there's one other position that I want to point out, and that is what I would call the position of being in the trap zone. What's the trap zone? The trap zone is being in between these 2 key moving averages. Okay, so if we take Apple as an example, you've got Apple, the stock, is in between the 20-period moving average at some certain moments and the 20-period moving average. It is trapped between both moving averages. Whenever you have a stock in that state, you will tend to get wide and whippy movements. And when stocks are in this position, vacillating in and out of the trap zone, this state tends to wreak a lot of havoc on a lot of traders' performances because of the lack of follow-through and the whippiness and the shakiness and the unreliability of every move, whether the move be up or down. So it is best for most traders to stay away from stocks when they are in the state or position of being in the trap zone or vacillating in and out of the trap zone. Okay, so you've got 3 key positions. Above the 2 key moving averages, you're in positive position. Below, you're in negative position. And of course, in between the 2 moving averages is what we'll call the trap zone. Now, let's get to the topic of the locations. Very important. I'm going to go back to NVIDIA. This is the example I want to use. Boom. Let's get back to the open yesterday morning. And we're going to highlight the 20-period moving average here and the 200. Now, I want to split the position above the 2 moving averages into 3 categories. So generally speaking, above the 2 moving averages is in positive position, but you have different states of that positivity. So right above, not too far above, is a very powerful location. Okay? Then I would say you would have an area that is higher than right above. Okay? And let's call that the middle area. Okay? And this is positive too, but I'm going to put a few fewer pluses here to suggest that it's not as powerful as being just a little above. A little above is the most powerful zone. As you start to get higher in positive territory, you start to lose a little bit of that positivity. So it's almost like the theory of too much of something good can actually start to move into the negative territory. All right? And then there's a certain point, which I would call way away from the moving averages, that is the least powerful. And you can actually start to get this area being a little bit more negative than positive. Might still have some positive traits when you're up there, but it starts to get more negative than positive. And anything above this area, anything super far away is just flat out negative. It's 0 pluses. So if you take these 3 or if you're going to include that extreme location of being far away, I mean super far away, that's 4 categories of the above state. If you take these 4 states, you begin to understand where your most powerful trades will occur. Your most powerful trades are going to happen in this area where it's above the key moving averages, but not super far away, not even really a medium distance away. If it's relatively close, but clearly above, your most powerful trades are going to come from here. The higher you go above these key moving averages, the less powerful your trades on the long side are going to be. In fact, if you get too super far away, going long or buying is absolutely wrong. And I'm not saying that stocks can't go up even more once they're super far away. What I'm saying is that the vast majority of them can't. And so we're a numbers group of traders. We play probabilities. If 80% of your stocks have struggles producing more gains to the upside when you are super far away, then that's not the game you want to play. You want to play where 80% of them have a good deal of capability of moving to the upside with decent power. And I'm telling you, this is where you want to live the majority of the time. This is where you want to live the majority. This is where you want to take the majority of your buys when a stock is above the moving averages, but not too far above the moving averages. And so if we take this play, this is a play that many of my traders know as the Bull 180. It's a solid red bar that is immediately followed by a powerful green bar that takes out the high of the red bar. This is a very powerful setup. This Bull 180 is happening in that super powerful zone of being above, but not being so super high above. It is this run that is not surprising how powerful, how steady the run to the upside was due to the origin of that run. It originated from the most powerful location you can have for a long play. Okay. Now, once again, quickly summarize. Right above is very positive. Right. There's a middle zone that's positive too. All right. I'd say that's not very close to the moving averages, but it's not very, very far either. All right. But that's going to be a little bit less positive. This is the super positive position. So I'm going to put more pluses there. As you go up higher, the positivity gets less. All right. And you can start to get some negativity that sneaks in there. And if you get too super high, it's just flat out negative. No more buying. If anything, short opportunities start to creep into the picture. All right. So those are the 4 states in the positive position. Remember, above the moving averages is positive position, but we break that positive position down into these 4 states. You want to live the majority of your trading life here. Okay. Now, if we go to the opposite side, I'm going to use beyond for this. This is going to be really, truly beautiful. You'll see that beyond is now under the key moving averages. Boom. Okay. And this bar, which breaks below this base, is the key trade here for us. Okay. This move is not only ripping through a sideways base, we call that a breakdown, right? It is originating the move to be, it is starting off the move under the key moving averages, the 20 and the 200. So you are now in negative territory. And the fact that this had such an amazing flow to the downside is now, or should now not be surprising to you because of the most powerful position that I spoke to you about. The most powerful position from a short perspective is going to be right under these key moving averages. So this is the most negative. We mean that obviously in a positive way now. Okay. So we want negativity now. The most power on the negative side will come when your stock is not that far below the key moving averages. Okay. Now, again, the same kind of 3 to 4 categories here where you're going to get your best trades here on the downside. You can get some decent trades here as well. Okay. This is below the moving averages. It's not close to them so much, not close to that dual moving average position, but not super far either. So there's still some good opportunities here. Not as good as the position above, but still decent. All right. But if you get too low, your negativity starts to wane and your stock starts struggling to make further movements to the downside. You might be able to even see some positive signs, more bullish signs sneak into your position. And way down here, this is just flat out positive now. There is nothing negative when you are super far away. No more shorting, no more considering more movements to the downside. Your stock's going to struggle in this super far away position to produce more movements to the downside. You want to stay away from thinking and playing the stock for more downside when you are super far away. When you understand these positions, I want you to understand how much of a huge impact from a quality standpoint this is going to add to your trades, knowing the location of the most powerful trades of all and why you should stick to the vast majority of your trades being in that first more powerful position. Whether you're taking a buy, you want to be slightly above the moving averages, but not too far when you take your buy. when you do a short and you're betting on the downside, you want to make sure the vast majority of your trades are initiated in that most powerful zone or position, which is just under the key moving averages, not too far. And you want to stay away from expecting more if you are super far away. You want to perhaps play a little bit lighter if you're far away. You're not super far away, but you're not super close either. So you're in the middle. That's probably going to produce some decent trades as well, but with a little bit less consistency. So you probably want to play that position just a little bit lighter. And if you want to even think about going counter trend, you look for signals in the opposite way once you are super far away. And so these two examples are perfect examples of showing you the power that can happen from the most powerful position just below in the beyond. Okay. And we go once again back to NVIDIA. Just above. So there you have it, traders. All the key locations that you need to add more power and more accuracy and more understanding and knowledge about when to play heavy, when to play a little bit lighter, and when not to play at all. This is huge, traders. Take it and run with it. This is a lifesaver. Until next time, trade well. Ciao for now. Boom.